Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Mauricio Ramos. Thanks for being on the show, Mauricio.
Thanks for having me. I appreciate it. It's an honor.
Yeah, I'm looking forward to this conversation. And Mauricio is a full-time real estate accredited investor. He's invested in 492 units in Texas. He's a lead sponsor on 48 units acquired in 2019, currently controls over $1.7 million in multifamily assets. So, thank you again, Mauricio, for being on the show, and tell the listeners a little more about maybe where you're located and what your focus is right now. And I want us to dive into some details of maybe this 48 units that you purchased.
Yeah, for sure. Whitney, first of all, thanks for having me. I appreciate it. I'll be happy to share my story with your listeners. So I am from Mexico. I grew up in Mexico, and I came to the U.S. for college. I came to Texas A&M University, graduated as a civil engineer, and worked in construction for 10 years. I did that for 10 years. About year 7, I started looking into real estate. It started changing my mindset. Just like many other people read Rich Dad Poor Dad, Cash Flow Quadrant, Richest Man in Babylon, and those books really hit me. And that's when I really started looking into, all right, I have to do something else. I don't want to be working for the rest of my life. I have to do something else, and found real estate and did a few small deals, a couple mobile homes, wholesale a couple of houses, and immediately right away found multifamily. And really, really clicked in my head. I'm an engineer, so I'm a numbers guy, and just the numbers of the how to scale up the rents minus the expenses and your NOI and the cap rate, all that clicked in my head, and I immediately went for it. And I was able to quit my job 3 years later after doing real estate. Now I'm living in San Antonio. I have I'm invested, like you said, in 492 units, and I've syndicated 48, which are in McAllen, Texas. And I'm doing full-time real estate now.
So let me get that right. So after 3 years of doing real estate, you were able to quit your job.
That's correct.
Okay. And what were the biggest things that allowed you to do that? Or maybe just on a high level, was it like 1 or 2 deals that are like, okay, this deal's big enough, or what was it that allowed that to happen?
So it's a snowball effect. I started with the smaller deals, did that first mobile home, second mobile home, and there was definitely a key deal in my career that I was able to wholesale for a 6-figure fee. So that really helped me to be able to, the money stop being the biggest issue to quit my job. I was able to do that, and I was already involved in real estate. I already own a 10 unit that was bringing me cash flow. I was able to reposition it, sell it for a lot more, and I had already my first 16 unit under contract, which we syndicated. So it was all that in the pipeline that allowed me to quit my job.
Wow. Okay. So I'd like to get into the 48 units a little bit, and some details about that deal or these deals. And maybe you can break it down a little bit. I know just from previous conversation, it was 2 separate deals, but maybe you can just break that down a little bit. And I'd love for us to go back to, how you found these and just getting into the syndication process.
These deals we found through direct mail. Off market, we send postcards to we get lists from ListSource or other sources where we can find lists, and we send them postcards, or we skip tracing them, call them. So that's how we found these 2 properties, 16 unit and 32 unit, both of them in McAllen, Class C properties in a great location, both of them. So we have been able to reposition. The value add was there. Typical mom and pop property. Just they're older couples. They were ready to retire, and we were able to negotiate a good price just from being able to talk directly to the seller instead of a broker. For example, one of the 32 unit, the property right next to it, there's a few 32 unit complexes right next to each other. The one right next to it was for sale at the time we bought our property, was for sale for probably a good 40% higher price than the one that we bought. And I mean, he hasn't been able to sell it just because it was through a broker, and the broker was asking for so much money. So I feel that there's a lot of power when you find a property off market and you're able to deal directly with the seller. You can just have a much better just opportunity.
Yeah, for sure. Much, just the transaction process, or tell me about, how did the property next door, the price tag that was on that. Did this seller know about that? Did they understand the price that was on that, and how did that affect the conversation?
I don't think either of the owners or sellers knew about each other or about the transactions going on. So one of them was off market. He was out of state. So I doubt that he knew how much the one next door was selling for. And I mean, again, this older guy, not very tech savvy. So I'm pretty sure he wouldn't, go on Zillow and check that. And also this other guy didn't know about us buying the property because it was an off-market transaction directly with a seller. So there was no way for him to know that the other property was selling for a lot less.
Okay. And so these two separate deals you found, off market, and you found through cold calling and postcards. And so, how often are you sending postcards?
We send postcards about a week. We send probably like 300 or 400 postcards a week. We try to stay on it. Every now and then, there might be a month that we don't send anything. But we try to stay on it. We buy lists with probably 2,000 or 3,000 addresses, and we send 300 or 400 at a time, and then just keep working through that list. And then once we finish that list, we start over. So each owner would get a postcard from us every 2 months or so.
And what's your criteria, like the types of properties that you're looking for?
We look for Class B and Class C in tertiary markets, such as McAllen, the surroundings of San Antonio, Kingsville, and we try to stay San Antonio and south of Texas, and between 12 and 40, 50 units, and okay, that have been built since or not earlier than 2005.
Okay. I think there's probably listeners that would say, well, why aren't you just, joint venturing these deals as opposed to syndicating?
Oh, how do you mean joint venturing?
So like, why wouldn't you just partner with somebody as opposed to syndicating a deal, of this size? I mean, depending on how you're doing it, syndicating is probably the legal route to go. But I just think, a lot of people are probably asking or wanting to ask, why wouldn't you just do a joint venture, meaning just partner with somebody as opposed to a syndication?
Yeah, I guess we haven't really looked into that option, and we really haven't found somebody that would be wanting to put like all the money, or have been able to just put half and half. So we've gone the route where we get 5, 6, 7 investors, and each of them put just a small chunk, and then we all enjoy the cash flow.
Mm-hmm. No, I congratulate you on doing it legally. That's awesome. And so what type of capital raise did you have to raise for these deals?
The first one was the 16 unit was 170,000, and the 32 unit was 330,000.
Okay. And so how did you start to learn the syndication process? What gave you the confidence to jump into the commercial real estate business and start raising capital?
It's a great question. But my 10 unit, when I first started, I bought a 10 unit on my own, a 10 unit apartment complex, seller finance, 0% interest. very low monthly payment. And it was a Class D property. I don't know if I would buy it again, but I was able to reposition all that. So seeing that process gave me that confidence to, all right, I can do this, right? I did it with my own money and it turned out pretty good. So that was also, I guess, a tool or something I could show on my resume to my investor, like, hey, I've done this. It turned out pretty well. I can do it, with our money instead of just my money. And I also I've read plenty of books. I listened to a lot of good podcasts like yourself, like your podcast, and also joined a mentoring group in Dallas, Texas. So that really, helped me and build that confidence and learn how to underwrite, learn how to, vet all these deals, how to syndicate properly, legally, how to, involve the right members to your team. So that is the mix of all that allowed me to go into the next level, which was syndication at the time.
So what's the business plan for the 16 and 32 unit?
So both of them is to sell them, exit within 3 to 5 years. So, we're a year in now. So probably in 2021, we're going to start looking into exit and see how the market looks.
Okay. And so what's the big upside? What's the value add on these properties?
Rents were very low. They were probably between $150 and $200 under market. Of course, we needed to do some work on these units so we can increase the rent. There was no laundry room, and both of them had a laundry room that wasn't being used. We were able to implement RUBS and start back charging for water. And then we were able to add some amenities on the outside. The 16 unit, we actually brought an artist that painted a mural. There's a big wall that it's in a corner. It's a very good, very visible location. So this artist painted a mural on this wall. So this allowed us to, separate ourselves from all the other complexes around the area. So that gives the opportunity to the tenants to say, all right, I want to live here because all the other properties look the same, but this one just looks nicer. So they're willing to pay that extra, maybe $10, $15 compared to the other units around them. So those were the items that we have implemented so far, as well as, exterior lighting, LED lighting, lower the expenses on electricity, better management. Of course, previously they were being managed by the owners, self-managed. So basically no system. So all those items have definitely reflected on the NOI.
So where do you see your business going from now till, let's say 5 years from now? Is this your focus, like you said, between I don't know if you said 12 to 50 unit properties, and that's kind of your niche? You hope to keep just hammering those size properties?
For now, yes. One of the reasons that we like working in this space is, we see that there's a lot of people in the 1 to 4 units, right? There's a lot of people in the single family space, very competitive. And then you go to the other side of the spectrum, and then you see a lot of big syndicators, a lot of institutional money on the 150 plus units, where it's hard to compete with it is on a smaller scale like we are right now. It's hard to compete with the people from California, the people from Dallas, the people from Florida that are bringing a lot of money, and they are happy with 4 cap, 4% return. So it's hard to compete with that. At the same time, they come in with $1 million earnest money, going hard day one. So how do you beat that, right? So we see that there's a lot less people in between this space, because for the institutional money at 32 unit doesn't make sense. For the single family guy at 32 unit, they dream about one day graduating into a 16 unit. So it's a sweet spot. and we're expanding a little bit into like the 60 and 70 units. But for now, we definitely love this space. We're being able to, these two properties in McAllen are close to each other. Now we're adding a 9-unit, which probably by itself we wouldn't buy, but just because it's so close to these 48 units, it just makes sense. I mean, we're vertically integrated, so it's just adding 9 more units to our portfolio. Similar investors, our investors are familiar with the area already, so it just makes sense to continue expanding. Same in San Antonio. So
you're self-managing as well?
Yes, we are. We're vertically integrated. I mean, we have a team, and then we have our management software, and that's how we work it out.
Nice. So tell me your thought process behind deciding to self-manage as opposed to getting third party.
So actually, at the beginning, we had this is a great question. At the beginning, we had third party property management. We went through 2 property managers, and some of the biggest challenges that we found where there was no sense of urgency for them to lease a unit at all. You know, we posted it on Zillow, we posted it on a million web pages, and it's not working. And they would find 20 things to blame, but it's never them. There was a few complaints from the residents that things that were not getting taken care of. So we had to step in and start, taking care of other things that we felt it was their responsibility. So it became a combination of us taking care of some stuff already and also having to almost micromanage the manager. So, I mean, if you're, knee deep in it, might as well just take over, right? Why are you going to be paying somebody for pretty much what we were not doing was collect rents and post eviction notices if there was any, and like maintenance requests. That's it. So, I mean, that's not hard. So we just took over it, and we're doing good. We're doing pretty good.
Have you found it difficult to implement the systems and processes of managing?
It's a work in progress, honestly. I mean, we're learning as we go. Like I mentioned, that 10 unit definitely helped me, because that one I self-managed just because it was 10 units. And so I went through several of the typical scenarios that you see on an apartment complex. So that really helped me, having that previous experience and then implementing into this one. It's still a work in progress. Honestly, we're still learning. We still every now and then make a phone call to a more experienced investor and say, hey, what do you do when this happens? And still making progress.
I'm not sure that ever stops. Like you get to a spot to where it's like you don't, need to know somebody that's ahead of you. So yeah, no doubt about it. Well, tell me, are you looking in one market, or how many markets are you trying to you're mailing to and cold calling and stuff?
Most of it is San Antonio and South. Definitely looking in San Antonio. It's a little competitive. And surroundings, that San Antonio has like Converse and Live Oak and other cities that, you don't even notice when you drive from one to the other. It's all together. So all these cities around San Antonio, pretty much Bexar County, and also Kingsville, which is a college town. Texas A&M University, Kingsville is down there, pretty strong university. So we like that area. And then also Rio Grande Valley, which goes pretty much from Brownsville, Texas, all the way through Edinburgh, McAllen, Pharr, Mission, Rio Grande City, Roma, Texas. All that is called the Rio Grande Valley. So there's some areas better than others. So we market to those areas. And now we're starting to do a little bit of Houston as well.
Tell me about, how many team members are looking to or helping you on the acquisition side versus the management side?
So it's me. As the the lead person. Then I have a business partner who's Adrian. He is actually taking care of the management side, and basically he is the operations manager. I have an assistant who helps me on the marketing side, send all the postcard, get phone calls, all that marketing side of it, the admin side of it. I analyze the deals and put the offers together, send it to her, and then she mails them out and follow up with the sellers. And then also on site, we have a person that helps us with leasing the units, showing the units, and just taking care of the day-to-day operations of the property.
Now that you've done a few syndications, what would you tell somebody that's looking to get into multifamily syndication or just getting started?
Just take action. Take action. I see a lot of people, hey, I want to do this. I've been looking into this for 2-3 years. Maybe they've been to some seminars. I've even seen some people that have paid for the $20-some thousand for the seminars, and still, just waiting on the deal to magically happen. Just take action. Choose one market, either go talk to brokers or do some kind of direct mailing and some kind of marketing, and take action. Stick with it for good 4-6 months, and you'll find a deal. And don't worry about, how you're going to 1031 out of that deal in 2 years or 3. Worry about how to find a deal, then worry about how to get it under contract, and just keep going with the process step by step. I see a lot of people wanting to see the entire plan laid out before they take the first step, and then just time goes by and they don't do anything.
It's like building an airplane while you're flying it, right?
Pretty much, yeah. Or building the parachute as you go down, huh?
Yeah, that's right. So what's been the hardest part of this syndication process or business for you?
Learning things that I wasn't familiar with before. For example, that second deal, the first deal that we did was just private lender. The second deal that we did was agency. So, for example, on that one, learning just the agency process. It's an entire job in itself. How to just deal with from acquisition, all the paperwork that they need, and then maintain all that paperwork through the ownership of the property. For example, in that property, it's we borrowed the money to rehab the units, so we have to submit payment applications every month. So all that process, it's just learning that process.
Is there anything that you could tell somebody that hasn't done an agency, hasn't used agency debt yet? Like maybe something to help them be prepared for that.
It's daunting to the eyes to see the lists and what you need to do, but just start by the first step and just continue doing it. And it's not impossible. It's not easy. That if it was easy, everybody would be doing it, right? So it start on the first step and continue doing it. It requires some certain skills of organization in being able to submit all the paperwork and some math and some spreadsheets, but it's not impossible.
And how do you prepare for this potential downturn that everybody's talking about?
Great question. Honestly, underwriting very conservatively. Don't go crazy with your exit cap rates. Don't assume that just because the property has been 100% occupied, you're going to be able to. Don't underwrite at 100% occupied or even 95. Though just being conservative. Don't rush into a deal just because it looks nice. Make sure it makes sense. Run your I forgot the term right now. Stress test your deals. Make sure it makes sense. Make sure it's in a good location, and you're not buying just because it's a hot market, right? In the cities in the middle of nowhere, 4 hours from the next city. Those would be some.
What's one way you stress test a deal to make sure it makes sense?
I would want to see that I'm still breaking even, like right around 60, 65 or 70. that I'm still breaking even. Occupancy. So if my occupancy for some reason comes down to 65 or 70%, I'm still breaking even. I'm not having to come out of pocket for that. That's one way.
Nice.
And also you want to have a little bit of reserves on your bank account for that particular deal, just in case rainy day comes in. Then you're not having to do a capital call right away.
Right. And what's a way you've recently improved your business that we could apply to ours?
Implementing systems. It might not be, a super new thing, but implementing systems like CallRail, like Podio, MailChimp, and also learning how to delegate. That's something that I struggle all the time. So learning how to delegate, I have an assistant now, and slowly I've been giving her more and more duties. And sometimes she even has to like take him away from me. But learning how to delegate, that's definitely a good thing to do to grow to the next level.
Nice. And what's your best advice for caring for investors so they want to come back to the next deal?
Can you repeat the question?
Yeah, just how do you take care of an investor so they want to return to the next deal?
So to give you an example, there was a quarter in that 16 unit that we had a higher turnover than expected. So we as syndicators, we had a few pieces of the pie. We were getting money from the LP side, we were getting money from the GP side, and also from the asset management side. So there was a deal. There was a quarter in which we decided to forfeit our asset management fee in order for the investor to see a little better return. So if it takes me not getting my full compensation distribution, so my investors can be happy, it's okay. Another example, there was a 28 unit that we had under contract for a little bit earlier this year, and the market shifted, the lending environment shifted, like around September. So when we had under contract, the interest went up, and the returns went pretty. They were pretty slim compared to what we wanted to give to our investors. So I mean, we had a lot of money already. We had incurred in a lot of expenses in, the lending fee, the lender fees, in other inspections and earnest money deposit, and we probably could have gone with a deal and made an average deal, but that's not what we want to do. So we decided to back out and lose the money that we had invested in the deal to protect our investors. That was not the return that we want to give to our investors. So we decided to back out. We shared the story with some of our investors, and they were pretty proud, that we are willing to take a hit, so they don't take a hit.
Yeah, that's awesome. That's awesome. And tell us how you like to give back.
Anonymously. I'm a Christian, and there is a verse or chapter, Matthew 6, and it speaks about not telling your right hand what your left hand does. So I do give back to my church and other charities. I just don't parade it on social media.
Nice. No, I appreciate that. I appreciate you sharing that as well. Tell the listeners how they can get in touch with you.
So I'm on Instagram as Mau RMS. So that's MAURMS. I'm very active there. I am, my email address is Mauricio, MAURICIO @Demedici Group. That is DEMEDICI group.com. Demedici is like the Italian last name. And my webpage is www.demedicigroup.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.